Hey, welcome back. My name is Victor. In this video, I'm going to do a discounted free cash flow tutorial. One of the subscribers on my channel asked that if I could do a quick tutorial, and I'd be glad to do it. I usually analyze companies on my videos and go through this spreadsheet that you're seeing right below. And what I'm going to do is I'm going to slow down and kind of show the calculations and show how I've created this spreadsheet for myself. I basically took other spreadsheets that other investors have used, kind of textbook spreadsheets, and really created one that I completely understand, that I created. I understand the mathematics. I understand what every number goes into a spreadsheet. I encourage you to do the same thing. Really know the numbers. Really know the numbers, backwards, forwards, left to right. That way you know the company, and that way you combine both what you know from a business perspective from the company, from what you're seeing in the financial statements. So let's get into the discounted free cash flow spreadsheet that I have here. So what is free cash flow? You take your statement of cash flows and you take cash from operations and you subtract what you had to put back into the business in the form of capital expense. And you could read the line. It's equipment, equipment and additions, that kind of thing. And if you watch any of my videos, you'll see how I take the two numbers and take one number minus the other, and that's our free cash flow. You can also Google it and it'll give you a quick explanation. Once you have that free cash flow number, you now can begin to develop your spreadsheet. So my spreadsheet is put together with a way that I like, and it's the first 4 years. First 4 years, I think I have a reasonable line of sight for the next 4 years on Meta, or the business that I'm looking at. What I like about the first 4 years, it gives me an opportunity to have two different growth rates. So if you look at here, I established, year one, either with the current year free cash flow that I'm projecting, or maybe the company is giving you that number in their guidance. It's a number that you're estimating, but year one should be, the year that you're in, and then growing from there. The growth rate for the first 4 years, I like having those first 4 years separated from terminal value because I can grow at a different rate. And Meta may not show a great example of this because they're just so darn big now. But some businesses, might be in high growth. And I could say that, hey, they're going to grow at like 20%, the cash flows. But then after that, it's going to start to slow down because the law of big numbers is going to begin to come into effect, and it's going to slow down. So I could grow these numbers at 6%, and then long term at 4%, which would be the terminal value. So let's go over a couple numbers. So again, starting point is free cash flow in year one. This number here, and I'm gonna double click on it just to show you what it's taking. It's taking the previous year and then adding the 6%. And it's going to do that over until year 4. So let me go over terminal value. So terminal value is going to take the first free cash flow stream out of going into terminal value, which is $50.9 billion. And it's going to grow it at 4%, which is my long-term growth, and also use the weighted average cost of capital, and then establish that all free cash flows are in the future will amount to the $1.178 trillion. And terminal value, is a hard concept to get around or get your head around. You might Google, on YouTube, terminal value. What does it mean? How does it function? To get your head around, how it's taken into effect all the expected free cash flows into the future, because that's what it's basically doing, and that's terminal value. So now let's get to net present value. So net present value is a valuation using a discount rate of a cash flow or multiple cash flows that you expect in the future. In this case here, I'm going to take a discounted rate of 8.5, and I'm going to discount the cash flows in this range, and then get to a net present value of that amount. So that's my quick tutorial on doing a discounted free cash flow spreadsheet. It's the one that I created just to kind of give you a tour of how I created it. And I'm sure you can create yours as well. There's lots of good examples online. All these calculations, they're all online. Just Google it or search it on YouTube. You'll be able to learn these formulas very quickly and put them into a model that you want. So I hope that you found this tutorial interesting. You know, keep the questions coming. Maybe I'll have, maybe on a Sunday, on a weekend, I could have a live chat, and I could open up the model and answer questions. Let me know if you'd be interested in looking at something like that. Do me a favor and like the video if you want to see more content around tutorials, and subscribe to my channel if you want to learn more about how I invest. Nothing of what I ever do is ever a recommendation. I don't promote any products. I don't sell any products on my channel. I'm just providing my experience. And for me, it's fun to do this. And it's also, I've learned a ton from other investors, and I enjoy kind of giving back to the overall YouTube community by just sharing my experience. That way people have multiple stories on particular companies. With that, good luck investing in 2023.